Good morning. My name is Scott Rudler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing some mixed markets around the world this morning. In terms of our markets, we have S&P futures up about 5 to 6 handles, looking like we might try to close above that 1850 level again today, Scott.
It's going to give it a good old try again. As far as the overseas markets, I feel like how many times have we talked about the mixed markets around the world, and that's pretty much been the thesis for 2014. And going with that theme, it's a lot of the same. You have China that bounced back small, and I think people accepted that it's weak, but if it intensifies, maybe perhaps it becomes a problem spot. Europe down small for the second day, just off 6-year highs, and the Nikkei that made a low about a week ago is 5% off the lows, but still down 8-9%. And then as far as our markets, on Monday, what happened? We tried to push above highs, and we didn't do it, and everyone tried to, figure out what does this mean? What does this mean? It meant pretty much the same that we've seen in 2014, that there's just not that much momentum, and that they don't want to let the market do it easily. Right. They're not giving away money on trees in 2014, not like they ever do. But anyway, with that being said, you look at the chart here of the SPX, and you will see that we follow trends, and that's what we do as traders. And to start the year, we broke this active or accelerated trend that started that corrective phase. Then we broke the intermediate, and then we held the 150-day. This was about 6% off the highs. That's when everyone in the world started talking about a 15, 20%, maybe 40% correction. But what happened? A red dog reversal right on the 150-day. Did not even get to the 200-day. So with that being said, first potent move took back 1770, and then we've been just trending higher. And then on this day, which we said Monday, didn't have enough power to get through, but we're still above the 8-day moving average. And if you stay above the 8-day moving average in the indices, that tends to be a strong market. So with that being said, let's look at 1852 to 1858. If we were to get above that and close above that, then the path of least resistance remains higher, and just keep staying with the best stocks out there.
Right. And meanwhile, there does continue to still be a lot of individual stock action out there, and earnings reports. Yesterday, we heard from Home Depot, which showed strength after its report. It did see weaker sales, but cost cutting helped offset them. They did blame that cold winter weather that we've talked about, that a lot of retailers have been saying has weighed on them. But what do you think about Home Depot heading into today?
Well, I think yesterday it was good to see a gap and go. The best thing after an earnings report is that you have levels to trade against if you're not in them. So you could have traded it after the open versus the gap, or you could have waited, or you wait a few days thereafter. And if you look at Home Depot, which is a big time barometer, you look at the size of this channel. It's been in a channel for almost, almost a year. You had a big gap up. So if it were to digest above this gap up, at some point, it probably makes a move to try and take out 82, and that would be healthy for retail and the overall market. And that this whole space is not created equal, because like you did say also, Target came out with earnings this morning.
Yes, the topping estimates by 6 cents. But
it still has that, the data breach overhang. Right. And Target, which still remains probably one of my wife's favorite places to shop, just something that that can't get out of its own way. So maybe today is a gap and go. You look at what happened here from 74 all the way down into the lows here. Now that the earnings report's out of the way, see if, this could be the low to trade against, which is 54.86. And really, can we get a gap and go, a little bit of power, and then at some point take out 58 to head back towards 62, and that would probably help the markets as well. Right now, Target all the way down here is not helping anything.
How about Toll Brothers? We also heard from Toll Brothers yesterday, showing strength after its report as well, but there were spots of weakness within it. It saw its first drop in quarterly orders in 3 years, also blaming the cold winter weather for buyers not coming out, but actually posted a significant amount of profit, being as home prices are still climbing.
Well, it seems like the market's trying to, emphasize on a glass half full, because it traded well yesterday, even with all that. So they said, okay, well, going to give it a pass because of the weather, like everything out there. Right. And I look at the chart of Toll Brothers, look where it is. It's right back at, these highs after a really long consolidation. And, you want to use something as a barometer for the market, look at the XHP. The home builders, with, I guess, rates being off, perhaps they're anticipating another move. And here are those old highs. And with that being said, it takes out these old highs, and that could be some fuel for, the S&P to hold above 1850.
And we had First Solar report last night, missed and guided lower. It is getting hit pretty hard now, so do you think it'll weigh on the rest of the group today?
No, it's definitely going to have some opening up in the red, and the question is, what do they do with First Solar? If you look at the chart here, it's right back to where it broke out at this descending channel here. This was the descending channel here. This was a nice trade for some way back when. Traded all the way as high as 59, so they were expecting to get something good, and now here we are, right back there. So this is why we don't take stocks into earnings, or if you wanted to do something, you did options, because this could hurt if you were long. If you're not long it, see what happens here. Does it, put in a low in the first 15 minutes and you could buy versus that low for it to fill a decent portion of this gap? Or does it open, put a low in the first 15 minutes, can't bounce up, takes out that low, and then, just becomes a doghouse stock for a while? So how First Solar handles today could give us some clues on how to approach this stock moving forward. A big gap up will give us some type of, big gap down will give us some kind of clues of how to deal with it depending on how much of it is left open.
Right, and looking at some of its peers, you take Solar City, for example. It did meet some sellers after hours due to First Solar's weakness, but overall, does it look like it might shake it off today?
Yeah, it's like up a few dollars already, a nice percentage. So basically, I think they're just making this as a must company. It gets a pass on everything.
Right.
Which, why not? We all love Elon Musk, and he's done a heck of a job as an entrepreneur, as an innovator. And, we talked about 80 yesterday. You look at this chart pattern, and here you go. This was 80, it broke above, it's still above it. They were supposed to report earnings, and they put it off a few days. Imagine if it was a different company. Well, anyway, with that being said, still seems like best in breed above all the moving averages. If it were to take out yesterday's high of 83.79, perhaps it could continue. This stock seems to be the chosen one, and at some point, most likely gets above 100 in the future.
And we do have long channels in SPWR and CSIQ. Do you believe they continue to build?
Well, these two are different. They don't have the Musk, the Musk
cachet.
Exactly. There you go.
That's what I'm here for.
They have long channels, and they look okay. And they've been in these for a while, and they're going to probably take or need some of their own good news to get going out of them. If you look here first at SPWR, it's been in the channel since October. So you're talking about 1, 2, 3, 4, 5, 6 months right at the end of it. If this were to open up down, which it's going to, and go green and blow off First Solar's numbers, I would think that a breakout in this name could happen pretty quick. And then you go with CSIQ, which was a leader earlier in the year. It's still consolidating, still looks okay. If this goes from red to green, you better believe anyone short here probably covers. So, keep your eyes on both of these. It might need another day or so for people to forget about the news from First Solar and then go. But all in all, it's been a nice channel, and we'll see if that persists.
All right, well, coming up, we're going to go in the trenches with social media stocks, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with social media, where the action is mixed, but we continue to find opportunities. Let's start with Facebook, which continues to grind higher above its 8-day. Does it look a little extended at this point?
It looks like it's a little extended, but people have been saying that for a while.
Yeah.
It's been a strong stock. It's trending well. Rewarding everyone on multiple time frames if you've been long. You look at the chart here of Facebook and start talking about this, last year with this beautiful cup and handle. Here's your cup, here's your handle. Finally, it ignited. If you weren't in it during the accumulation phase, boom, you still could have bought it above that earnings when they blew it away around 33. And from there, you had a nice, A move, then you retraced, red dog reversal, and then, there you go. You go to the daily chart and you look at it a little closer, and, with the takeover of WhatsApp and a lot of people talking, who knows, maybe at some point it would break this ascending channel and give us a little bit of a corrective phase in order to maybe buy back, but that hasn't happened yet. So with that said, I'm a little short, which people see on the virtual trade floor, but I'm not going to be stubborn, If it were to get above 71.44, I will cover. And if we happen to get weak and it goes from green to red, maybe I'll add here and then see if we get some kind of different move here. But overall, this trend's been strong. You have a big gap up after earnings and no reason to fight this. I'm not sure why I've been doing that the last 2 days.
Well, how about Twitter? Briefly broke below last week's pivot low. Do you believe lower prices are in store? Do you have short on the brain here?
You know, this almost feels like an Amazon type. Anytime it looks like it's about to break down, you know, it could go higher. And in my head, I feel like a year from now, this stock could be higher. So I'd rather look for a way to be long it versus a cute short. So with that being said, you look at Twitter's chart, you know, really nice trade. It started the whole process. Here was your IPO. There was your first, you know, buy price above this descending trend line and then above the prior IPO highs. And this was before the entire first earnings report. Boom, that was really pent up, really fast and furious. Then it consolidated, and then they were a little upset about, you know, some of their parameters there. So with that being said, came back, retested, gave us a nice little gap fill, and now it's slowly coming back in. Some are trying to short this, and who knows? Okay, if it breaks below 54.50 and can't get back above it, it could come back and retest this area. But, you know, in my head, I think maybe it does one of these where it breaks below, comes back above it, and then at some point we get some type of buy area to continue. But at this point, it's just kind of out of play, and I don't think I've traded this thing in 3 days.
Oh, what about Yelp? Had that nice breakout on Monday and then hung in there yesterday.
I could use some Yelp with it. Anyway, I've been holding this thing for a while, and every time it looks good and going to break out, it doesn't go, but I'm still there. You look at the chart, and you know, you can see on my disclosures, I've been long Yelp, and it did give you a little bit of an ad here, and then yesterday was a little weak, but I stayed with it, and so did a lot of other people, and now it's flagging again. If we get a strong day in the market and they want to come for something, perhaps you can get another trade here above 96.32 or 97.23, and you know, we know the law, or we try and talk about the law of $100 numbers, and once you get above 90 and you hover, chances are you want to kiss triple digits.
What about LinkedIn? It did get above its 200-day key moving average yesterday and then was upgraded this morning. So will this one be on your radar today?
This one I don't think you could chase. People, when I was at the New York Trader Expo, everyone was talking about LinkedIn. Like, Red Dog, you talked about this when it was 90 and it was a great trade up to 200, so now it looks a little wishy-washy. How do we get back in? It's like, you know what? Use a Red Dog reversal. Red Dog reversal is a calculated method to get involved in a stock when you're not sure if it's, you know, putting in a low or it's just a trade or a swing entry, and you look at LinkedIn that's come all the way back or come from, you know, 260 all the way down, and then here is that Red Dog reversal right there, 185.73. Then he actually even had a 2-day move that digested and continued. Here was the news that I think they're getting some China penetration or something like that. And then with that being said, now it's upgraded. So we're coming right back into this prior big resistance. So if you want to try and be cute, look for a cute short into, you know, maybe into this 215, 220 area, you know, or, you know, avoid and then wait for a better setup. I was hoping we'd get a few days of digestion and then we'd have the gap to trade against and then another move. But this has been a pretty quick move from 185 to 215 in, you know, a week or so. Don't chase it, but it doesn't mean it's a short, but, you know, look for the 30-minute high, and if you see some kind of divergence, maybe there's some cash flow there for that.
And Zynga tried to wake up yesterday. Will you be looking to this one to see if it can again today?
Yes, this one's been, you know, the treasures for trash trade. We've talked about it. It's been on my disclosures for a few weeks now. You look at the chart, trending higher. This was the gap up after earnings, nice little wedge. It's been a little sloppy, but it went up, consolidated over 5, tried to get above this pivot yesterday of 516, couldn't quite get, still looks good. You know, just you go to your monthly chart, you can see a clearer picture. You know, I'm still thinking it could see $6 at some point this year. Some think $8. We'll see what happens.
All right, let's do some quick hits here. Let's talk Apple first. Still looking weaker, closed near lows. How are you approaching it today?
Well, you know, if you took some off, there was a nice tactical Red Dog reversal at 55.24.60, and I talked about it in the virtual trade before I got in. Went from negative to positive, was up $2-3. I'm like, you could trim and trail, and then see if there's any more. And yesterday it was still positive before getting weak again. So with that being said, I think you got to do the same type of strategy, but be a little bit more skeptical. If Apple were going to be strong, you know, probably shouldn't have pulled in as much already, but at least it gave you a topping tail into resistance to give you some clues to reduce some risk if you rode this last move through this gap. So with that being said, small Red Dog reversal here, did not stick, did not get above this, reversed actually, and now it's a little bit lower. It's off the lows pre-market, so right down 521, okay, and right down where this gap is. I'd like to see a quick push lower, defend the gap, and then if it were to come back above 521, maybe we get another red dog reversal, and you get a tactical little setup here. And then at some point, maybe it takes it out, but from a little lower. So at this point, just be very, very short term with this one, and then we'll see what happens on Friday when they have their shareholder meeting.
And Tesla has still had quite the move, added another 7 points there. What do you think? It's probably pretty hard to chase at this point.
You should trade it yourself. You trade it, I'll watch you.
We'll see.
It's true. It's up 7, 8 points, and it's been a heck of a move. The time for adjustments was the day or a few days after numbers. Anytime you head into numbers, I talk about the risk of the event. That I rarely take any longs or any shorts into earnings because you never know what's going to happen. It's a coin toss. But if you have some kind of conviction, you take options because risk is premium paid. With that being said, if you were a Tesla fan and you said, okay, I don't want to take the earnings risk, you still had some ways to get back in either after hours or the day after. You look at the chart here, you will see that with Tesla, really nice move from the red dog reversal here. Okay, right before earnings, it put a high in at 206. Okay, sorry, that's right here, 206. And actually, no, there it is, sorry, 206. And then for 2 days it came in, and no big deal. Still held the 8-day, still above the 21-day, which was, serving as a nice roadmap before them. And then earnings came out. If you were short earnings, okay, you had a spot to cover 206, and it went to 222 after hours. Then that day, during the day, it actually tested 206, held, showed some commitment to the prior high, and then you had an inside day. So with that being said, this was your day that traders could have came back when it held above 206, took out 215, and it closed on the highs. The momentum guys that took it overnight probably got paid. Anyway, this could be a new range here. Let's talk about a secondary. Who knows? All I know is you have 259 is the high now. You have the gap that starts at 228. There'll probably be some micro trading going in until it decides what it wants to do next. You look at this monthly chart of Tesla. It's been unbelievable. Just so you know, the best stocks typically start with high valuations, high PEs, and a great story and work their way into them. You don't short them based on that. Price, trend, rule in the first 5 years of a stock's history, in my humble opinion.
All right. Well, how about BlackBerry? Because we often talk about Scott's day 1, day 2, day 3. We just had a nice 2-day move out of BlackBerry on the Ford Sync news and the low-cost phone overseas. What do we do today?
I'd like to see it digest. If you look at the chart, there was time to get in, time to add, time to trim and trail, and now I feel like a little digestion would be good. You look at the chart here. Here was your red dog reversal, and here was your power, and then it consolidated really well. This was your maybe feeler. Here was your add. Then yesterday had a quick move, closed off the highs like it did the day before. So I'd like to see it digest above 1025, let it go sideways for a bit, and then perhaps it could be another nice add when it takes out, or if it takes out this 1090 area, and then your next real resistance, in my humble opinion, is closer to 12. And I think that all the news that's coming out showing that this company is not dead in the water. It may not be what it was, but there's a big short interest, and it doesn't have to be for it to go back to 12 to perhaps $14. You look at the weekly chart here on it, and it's just poking its head. Look where it once was. This thing, in my opinion, maybe even this year, if it keeps doing what it's doing, could see close to $15, and from here, that's a nice percentage gain.
How about C-Trip? What do you think about the setup here? Are you expecting a breakout to higher prices potentially?
This one's a little bit different. I don't really trade that often. There's a nice bull flag. I bought a little bit yesterday. I'll see if there's an ad. You look at the chart. It's all based on the chart. I know I was trying to find the bottom in it, and I had some frustration down there. But anyway, look at this move, fast, furious to the upside. Had some continuation. Now you have a nice bull flag right here. So with that being said, if it wants to go, it's set up for it. Okay, if it does, it's got to get above this 51-ish. If it gets above 51, here's your next area, and then that's where the highs are. So with that being said, nice bull flag. Maybe we get continuation. I would be small and wait for a high volume confirmation for that to happen, if it does.
All right. Well, as we wait and see if the S&P can finally close above that 1850 level, what else will we be focusing on today?
Yeah, I want to see if how the banks act today. The banks were very weak yesterday, which got me a little skeptical on the rally. So we'll see if they just come back up or they just continue to be choppy. If we hold above 185 today, really there's no reason to be super duper bearish. I don't think you need to be focused on the indices. Yesterday, while the Dow was down 20 points, you had stocks moving all over the place from 1% to 4%. So that's where the action has been in individual names both ways. So don't be so over dramatized by the people talking, everywhere. Look at the price action, look at specific names. know whether you're looking to take a small tactical trade out of it or if you've been holding it for a while. Time frame is key. And try not to be too frustrated because, again, 2014 is not 2013, but so far some decent similarities considering we were up 28% last year. We've digested for 2 months. So if we wind up continuing to highs now, seems pretty damn normal.
All right. Well, happy trading, everybody. Have a great Wednesday.